What you say? What you say? Good morning. This is Coffee and Chat with Rev Bruce. Good morning to y'all out there on YouTube, Twitch, Facebook. Good to see you. Glad to know you're out there. God bless. Hey, we're doing something different. Continuing with this financial fitness challenge, and I say that with a sigh because this one is heavy. This one is trying to shift mindsets, but also shift money mindsets. And we'll get into that a little bit more further down the road. But shifting money mindsets at this point in the game is really, um, really something that can take its toll on us. And when we look at this and we look at how we're handling money, what we're doing with money, um, how money's coming in, how money's flowing out, and trying to get a hold on that, life goes on. I believe John Lennon said it. Life happens while you're making other plans. You don't get to just sit still in isolation and everything just go on around you. No, life happens while you're making other plans. You need to still continue from day to day with the day to day to make it happen. So today we're talking about building a money map. Building a money map. And I want to really talk about this from the perspective of understanding um, what the goal is. And I want you to understand this is really about short term goals more than anything. And I say that because when we look at where we are with the money maps, you'll see different aspects of what we can do in as short as 3 to 6 months and even 12 months versus 3 to 5 years. And I say that's because the span of goals, particularly financial goals, is still pretty short. And when you talk about the shortness of it, or the duration of it, you're talking about um, a focused time period. Let's put it that way. A very focused time period where you want to put the big picture out there where you can see it, right? Um, Make it happen, take it on, and let it be, right? You want to get the big picture, then you want to get down to the detail. Remember, the devil is in the details, and then attack it with focus. And that's really the primary thing. Are we attacking this thing with focus? Are we attacking this thing um, from a viewpoint where we can say, hey, I'm going into this, I'm going into this with all of my best. I'm going into this with all of my ideas. I'm going into this with everything I have. I'm going into this with total focus. I'm lasering in on this, and I'm using this tool to make the best happen for me, right? And if I'm doing that, then I'm being not so much reactive, but I'm being, focused on what is my goal, what is my intent, and if I'm using this as a planning tool, I know I can always go back and have this as my focal point, right? I can always have this as my focal point, and if this is my focal point, then that keeps me from going back and forth and swaying and wavering. And I'm using this as a short-term financial goal tracking device. Short-term financial goal tracking device. Am I on point with my short-term goals based upon what I'm doing with this money map? And you can use this mapping process for other activities. We're using it for financial goals, but you can use it for something else. And the other part of this is it's not about not so much about it making money as much as it's about making moves, right? And there's a difference between making moves, making money moves that will let us continue to make money but also how do we make money, make money? How do we make money, make money? Which is a measure of accumulation and appreciation, as we'll see in this time today. Let's just break this down, right? 6 month money map. Um, Here's how I view it, right? And I want to stress again that this period is really about making moves. This period is really about making moves, not necessarily making money, right? Not about earning money, not about going out and starting a side hustle. I would use a different map to start a side hustle. I would use a different map to build a business, right? This particular map I'm using for a financial goal, short term, to push forward and see, okay, what's my plan? How am I going to get this done? What should I be focused on at each stage of the plan? What should I be focused on each stage of the plan? And so for the money map, I really want to look at this from two perspectives. One, from a big picture perspective, which is the broad strokes, right? Use the broad strokes and a month by month view, and then a little more detail of the month to month when I go into um, the detailed view, right? And so these are different, and when we look at them and we understand their difference, then we begin to see, okay, the money map, right, in this big picture shows me 6 months, right? The goal is an emergency fund, and first month is accumulation, right? Second month is automation. Third month is allocation. Fourth month, acceleration. Fifth, appreciation. And sixth, assessment. So when we put this money map together, those 6 money moves are where our focus goes. Accumulation. How are we putting the assets in? How much are we putting in? How frequently are we putting it in? Right? Automation. Okay. Take the pain out of it. Do it automatically. A lot of people do direct deposit with their investments. God bless them. You know, Robinhood gives you a great deal on that. But is that really where you want to be with your funds? And if you're not quite out of that paycheck to paycheck stage, you don't want to jump into all of your money going into a Bitcoin investment, right? Or an automatic ETF investment that you're going to end up pulling out in 2 to 3 months. This is to get you in a place where you can hit one of those baby steps that we talked about with Dave Ramsey, where we talked about that $1,000 emergency fund. Can you do it in 6 months? You know, at a couple $100 a month. You know, 175 a month. Right? Can you do it? So once you hit allocation, you start talking about how you're going to divvy up your money. And then once you hit acceleration, that's where you start to see your money that's been gathered, you start to see it accelerate. You start to see it start to grow, and it starts to push more so into that snowball effect. When it starts to gather and it becomes bigger, and there's some acceleration with the compounding frequency as well as interest rates and other market factors, and you begin to see that. Appreciation is where you see the evidence of the overall value of the principal and the underlying assets beginning to swell, right? They're just beginning to swell. They're not blowing up. And then I would say month 6, I would do the assessment. I would find out, okay, where I started versus where I am today. And where I am today versus where I'm headed next. Okay, that's what I would look at in my assessment of a 6 month money map. That's what I would take into account. So let's take this from a more detailed view and hit it. Boom. Don't be afraid to start small. I would say that month one. Don't be afraid to start small. Um, I started investing with less than $50. Right. I believe it was $35. Alger, um, the Alger Fund. God bless. That was in the 90s. It was in the 90s. Okay. So don't be afraid to start small. It'll grow. It'll accumulate. Right. Set up automatic transfers to occur on a regular basis based on your paydays. When you get paid weekly, bi-weekly, monthly. If you're living off of your side hustle or your business and you're going to the farmer's market every week or weekend, right? And Friday and Saturday you're bumping around at farmers markets, you need to get things set up in place so you can make that deposit on Monday and then have the funds go into your other accounts the following week or whatever, put it on a schedule, but whatever it is, automate it based upon how you get paid. Whatever you're doing, base it upon how you get paid. That way it works for you and your time frame. Boom. Your allocation. Don't put all your eggs in one basket. Grandma used to say it, mama said it, and now I'm saying it too. Don't put all your eggs in one basket. Divide. The Bible says divide it among seven, if not eight. In order to have that diversity, definitely look at it so you can maximize earnings potential over time. Sometimes real estate is hitting, and then sometimes it's down. Sometimes treasury bonds are yielding 4.5%, 5%, and then sometimes they're way down 3 and below. It all depends. Interest rates, everything changes, and so everything is in flux. And so since money and money exchange is in flux, you need to be able to move with that and shift with that and shift your asset allocations based upon that so that you can maximize your earnings potential over time. That's what that's about. Don't put all your eggs in one basket. Then acceleration. This is what you can see. You can see it. You can put it on a chart. You can plot it out and see that this is beginning to move and move in a direction that's positive, and it's rendering results based upon consistent compounding. Don't interfere with it. Don't mess with it. If anything, add to it. If anything, add to it and combine it with other stuff so that it can continue to grow with more consistency. Okay? Appreciation. The value of what you have is now beginning to amass, and it's due to the rising rates, other market factors combined with that consistent compounding. Compounding frequency is something we don't talk about a lot, but if it's compounded daily or even weekly, you're at an advantage over the person who may have it compounded monthly, right? And so if we're up here creating CD ladders and it's being compounded monthly, but we have other assets that are being compounded daily and weekly, the compounding frequency is hitting more often with those other assets than the CDs. The CDs may pay well and may serve as a good base and a safe place, but they're also not the only thing that we're going to be invested in. So keep that in mind, that compounding frequency is something that will come into play as we work with these assets, right? So now here we are finally with assessment. And assessment, we just want to look at the progress. Where we are we on track? Look at where we started, right? and look at where we are now, and finally looking closely at where we're headed next. Is where we're headed next really where we want to go? Is where we're headed next really how we want to move? Is where we're headed next really what we have intended for what we want to do with our money? And I say, looking at this money map, both big picture and detailed view, provides us with some keys to moving along. If we're going to do this for 90 days, right? I would break it into 10-day intervals. If we're going to do this for over a year, right? I'm going to say do this for over a year, then I would definitely take this um, from a month to month perspective, and I would look at it in segments, right? What time of year does it work best for me? You know, I say let your money map, let that serve as your guide for your short term money goals. Let that do that. Let that do the work there. And if it does the work there, then you can begin to see, okay, while I'm doing this, can I do other things? While I'm doing this, can I, begin my retirement investment? Can I do some other stuff? Remember, you're gonna have to have a learning curve, right? And your learning curve is best to do it with a quiet uh, project, right? Emergency fund. You can do a savings at a credit union, CDs at a credit union, also a bank, thrift and loan. I would say if you do the money market, I would say try to do that at a brokerage firm. I know I love what you can see at places like Schwab, right? Places like Fidelity. You know, Schwab, you can definitely get decent, a decent um, rate with their money market, and Fidelity, you can get a solid rate. In fact, if you do it with, um, I want to say if you do it with your brokerage account and not the CMA, you can use um, different money market mutual funds. These are just a couple of samples of money market mutual funds available. I've made some videos about them and utilizing them, but I say utilize um, money market mutual funds in a way where you can keep cash that's unsettled. There's a difference between, you know, the money market mutual fund versus the high yield savings account, right? And I would say the money market is less of a savings and more of a pass through. Okay, I think when we start talking about where we put money and how it sits, and a lot of that comes into how long are you having that money sit, and how much money do you have sitting. For instance, you have some ETFs that pay now weekly dividends, weekly distributions, um, but those are based upon highly leveraged underlying assets. Highly leveraged underlying assets. And if you don't know what that means you need to go back to that learning curve and get into what I said about Investopedia and learn some more about stocks, options, leverage versus, having the full assets, and then maybe dip your toes in that game, right? I'm not talking about anything with Bitcoin and loaning Bitcoin and receiving payments on, Bitcoin that's lent. into the marketplace. I'm not talking about stock lending or anything like that right now. I'm just talking about buying CDs, money markets, and potentially high yield savings accounts for this particular method of getting your emergency fund built up over 6 months. CDs, money market, and potentially high yield savings account. All that other stuff, that's increases your risk. Although it offers a potentially higher reward, it increases your risk. And when you increase your risk, um, that also begins to temper with your risk tolerance, your results, and your returns. So keep that in mind. All right. If you ever need to reference and check out um, more information on investing, I highly recommend Investopedia. Investopedia is hands down one of the simplest, straightforward, in layman's terms, information on investing for beginners out there. And so I say start there, look at it with a new perspective and a new perspective of being open to what it's talking about and not what you've heard from others. Okay. And so this is really the money map, and use the money map for the remainder of this challenge. Use the money map for the remainder of this challenge. And I also say, hey, we're going to be checking in next week. We're going to be doing a mini assessment, a 30-day check-in. Where are we? How has this worked out? What have you done? What haven't you done? What's still on your list to get done? You still got time. It's still part of the challenge. Let's rock and roll. And I'm feeling this. This has been a great time. Once again, coffee and chat with Red Bruce, trying to get that financial fitness in order. God bless. God be with you. Much love.